Hi traders, you are all welcome to another edition of Weekly Forex Forecast on FXless Trading School, which is for 10th to 14th of May year 2021. In this week, I'm going to share with you some list of currency pairs I have on my watch list should in case of breakout of trade opportunities next week. If today is your first time viewing my YouTube channel, you are welcome. And then do not forget to subscribe to the channel as well hit on the notification bell, so whenever I release additional content of this kind, you're gonna be the first to be notified. Also remember, trading is a high risk and a high reward investment. Therefore, it's advisable you know what you are doing and then risk smartly. Here are the list of currency pairs I am watching out for next coming week. I have the British pound sterling paired against the USD. I have the euro paired against the USD. I have the Australian dollar paired against the USD. I have the New Zealand paired against the Japanese yen. I have the New Zealand paired against the Swiss. And then we're going to wrap up our analysis with the XAU paired against the USD. So let's dive into the weekly forex forecast right now. The first currency pair on our watch list is the British pound sterling paired against the USD. This currency pair is still on its aggressive bullish rally. We can see our price is now carving an inverse head and shoulder pattern right here. Here is the left shoulder, right here is the right shoulder, and then this is the head of this formation. As well, we can tag this formation right here as a double bottom. So next week, as a price action trader, look out for a more bullish anticipation on these currency pairs. We have to pay close attention to the key level structure, which acts at the price level of the 1.3992. This is the resistance structure for this currency pairs. So next week, if the boost can successfully break out of this key level structure, the next key level structure the boosts are going to be willing to retest would act at the price level of the 1.42413. Alternatively, next week, if the bear should step in, whereby they put price downward, they still have to retest the dynamic support trend line we got right here, which have been acting as a dynamic support for price on these currency pairs. Therefore, if the bears can successfully break out of this dynamic support trend line right here, then this will suggest the bullish pattern we got right here is gradually going into a state of invalidation. So next week, as a price action trader, focus your attention to the key level structure, which acts at the price level of the 1.3992 to see if the boost can successfully break out of this level right here. It would be better if you can see a bullish price action of a retest right here before you go on a long anticipation on these currency pairs. For the fact of the formation we got on these currency pairs, I support a bullish bias for a more bullish rally. The next currency pairs on our watch list is the euro paired against the USD. We can see on these currency pairs, price made a strong bearish downward move and the price is gradually reversing into a bullish rally right now. We can see the dynamic resistance trend line we got right there was being broken by a Friday bar by long bullish bar. Also, if you should view these currency pairs properly, you're going to figure out there is an inverse formation we got right here. We can tag this formation as an inverse head and shoulder, which technically support a bullish implication. So next week, as a price action trader, you need to focus your attention to the key level structure we got right here. This key level structure acts at the price level of the 1.21810. We can see it was a resistance structure for price right here, likewise right there as a resistance level for price. So next week, if the boost can successfully break out of this key level structure, it's better to wait out for a strong bullish price action signal bar right here. This could be a retest before you anticipate for a more bullish no rally. Alternatively, if the bear should step in next week, whereby they pull price downward and then close below the dynamic resistance trend line we got right there, then it suggests this currency pair still has a high tendency to transform into a more rangy market. And then if that should occur, this could interest sellers to put price downward to retest the key level support we got at the price of the 1.19606. And failures for the boost to defend this key level structure will lead into a more bearish no downward rally on these currency pairs. So next week, as a price action trader, focus your attention to the dynamic trend line we got right here. Price may make a retest right here. Look out for a bullish price action bar right there, or alternatively, look out for a bullish price action signal right here before you go on a long bullish anticipation. Likewise, a bearish close of bar below this dynamic trend line right here would suggest a false breakout for this bullish pattern we got right here. The next currency pairs on our watch list is the Australian dollar paired against the USD. After the strong bullish rally we got right here, price went into a state of a range market right here. And currently right now, we can see price is currently trying to break out of the key level resistance we should have at the price level of the 0.7820. So next week, as a price action trader, focus your attention to this key level structure of the 0.78209 towards a resistance structure for price right here. Likewise right here resistance, right here as a resistance, likewise right here as a resistance. We can see right here, this was a medium of a ranging market that was a rectangular formation after an extended bullish move. So next week, as a price action trader, we need to focus our attention to see how price is going to react to this key level structure. Maybe price is going to carve a strong bullish bar right here before we can split for a more bullish, aggressive rally on this currency pairs. Alternatively, next week, if the bears should ensure a strong bearish close of bar into this medium once again, this could interest a more rangy market in this currency pairs. And then if the bear should successfully pull price downward to retest this key level support we got at the price level of the 0.7567, then this would actually means the formation we got right here can be tagged as what? As an upright head and shoulder. Here is the head, right here is the left shoulder, and then right here we can tag it as a broadening right shoulder for this formation. And then this level right here will be the neckline of this pattern right there, and then this could suggest this is a gradually built up of a bearish pattern for a more bearish rally on this currency pairs. So next week, focus your attention to this key level structure to see maybe the bulls are going to be willing to pull up price for a more bullish rally, or maybe the bears are going to pull price downward for a more rangy market and then to retest this level right there for a more bearish anticipation. The next currency pairs on our watch list is the New Zealand paired against the Japanese yen. We can see on this rally, this currency pair is on a strong bullish trend, and then we can see the formation of a symmetrical triangle right here. That is at a top of an extended bullish rally. So the key idea right here is we want to go along with the existing bullish rally on this currency pairs. We can see there was a retest that was on last week on this dynamic resistance trend line of this symmetrical triangle. So next week, as a price action trader, you need to focus your attention to see how price is going to react to this key level structure, which is the price level of the 78.872. It's actually acting as a resistance structure for price right here. We can see right here as a resistance, likewise right there as a resistance. So next week, a strong bullish close of bar above this key level structure would suggest a more bullish aggressive rally on this currency pairs. Alternatively, on this currency pairs, if the bears should ensure a bearish close of bar, they still have to clear off this dynamic trend line we got right here. And then if the bears should successfully clear out of this clear price below this dynamic trend line we got right here, then this would suggest this breakout right here can be tagged as a just false breakout. And then this will suggest this pattern right there has been invalidated. So next week, as a price action trader, focus your attention to the dynamic trend line we got right there. Likewise, the key level structure we got at the price level of the 78.872. Maybe price is going to offer a bullish price action signal bar to anticipate for a bullish rally on this currency pairs, or maybe this level is going to fail to hold price. I personally have executed a long position on this currency pairs after the retest of this dynamic structure right here that was on last week. The next currency pairs on our watch list is the New Zealand paired against the Swiss. We can see the breakout of this symmetrical pattern formation we got right here into a more bullish rally. This is a repetition of this symmetrical triangle at this level right here once again. If you watch the analysis which I released, which I shared in this weekly Forex forecast on the New Zealand paired against the Japanese yen, it is the same technical analysis which is applicable to this New Zealand paired against the Swiss. So next week, as a price action trader, you need to look out if price can offer a breakout of this symmetrical pattern right here. Look out for a retest, look out for a strong bullish price action buy signal before you go long on this currency pairs. Alternatively, a close back of price would suggest a still more rangy market in this currency pairs. And this could interest sellers to retest the key level support which acts at the price level of the 0.64825. Failure for the bulls to defend this key level support right here, likewise as a resistance level right here, this would suggest this currency pair is gradually going into a bearish rally, and this would automatically invalidate this bullish pattern setup we got right here. So next week, as a price action trader, focus your attention to see if price can offer a strong bullish breakout of bar, a retest before you go long on this currency pairs. It's time we wrap up our weekly forex forecast analysis with the chart of the gold. That is the XAU paired against the USD. We can see the bearish rally we got on the gold in a bearish channel right here. So price is currently retesting a dynamic resistance of this bearish channel. So we can see when price retested right here, it went into a bearish trend. So next week we need to focus our attention on the chart of the gold. If price can offer a strong bullish close of bar above this level right here, and then with a strong bullish retest right there, this could suggest a more bullish rally on the chart of the gold. We can see the double bottom formation we got right here led into the bullish movement on the chart of this gold. Alternatively, next week, if price should carve a bearish price action signal bar right here, this could still lead the gold into a bearish pullback. We can see when price retested this high swing we got at the price level of the 1959.201, price carved a bearish engulfing bar which led the price of gold into an aggressive bearish rally. So next week, as a price action trader, focus your attention right here to see maybe the boost are going to be successful to break out of this pattern, carve a bullish price action signal for a more bullish rally, or maybe the bears are going to set in to carve a bearish pattern for another bearish rally on the price of gold. And if that should occur, there's high tendency for this level to still serve as as a high-low swing for price. Like we can see right here, it was a support level. There's a price level of the 1764.98. Likewise right there as a support for price. Likewise right here as a support for price. So failure for the boost to defend this strong key level structure of the 1764.987 would gradually lead the price of gold into a more bearish aggressive rally again to the price level of this 1682.016. So this is all I have for you in this weekly forex forecast. Thank you so much. Thank you for your time. Thanks for watching this weekly forex forecast from the beginning to the end. Do not forget to like this video, put a comment down, subscribe, and then hit on the notification bell so whenever I release highly educational content of this kind, you're gonna be the first to be notified. Have a wonderful weekend ahead. Peace.